Ladies and gentlemen, good day and welcome to the Q4 FY26 results conference call of Dev Information Technology Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Harsh Gosavi from Kirin Advisors. Thank you, and over to you.
Good day. On the behalf of Kirin Advisors, I welcome you all to the Q4 FY26 conference call of Dev Information Technology Limited. From management team, we have Mr. Jaimin Shah, Managing Director and CEO. Now I hand over the call to Mr. Jaimin Shah for opening remarks. Over to you.
Good afternoon, everyone, and thank you for joining us today for Dev IT's Q4 FY26 earnings conference call. On behalf of the entire Dev IT team, I would like to extend a warm welcome to all our investors, analysts, shareholders, and other participants joining us today. We truly appreciate your continued trust, support, and interest in our company. As you all know that Dev IT has evolved significantly since its inception in 1997. Today, we are a diversified technology service company helping enterprise accelerate their digital transformation journey through our capability across AI, blockchain, cybersecurity, cloud services, enterprise applications, digital transformation, managed IT services, and application development, which we call end-to-end IT services. Over the years, we have built long-standing customer relationships by combining technology expertise with a deep understanding of business requirements. As you all know that our philosophy is people first and business always, and that is how our customer relationship, our customer retainership, our vendor retainership, and above all, our employee retentionship is really strong. Our focus has always been on delivering measurable outcomes for our customers while maintaining a strong execution-led culture. What differentiates Dev IT in our ability to offer end-to-end technology solutions supported by strong domain expertise, quality-driven processes, and a customer-centric approach. We work closely with clients to understand their business objectives and deliver solutions that improve operational efficiency, strengthen competitiveness, and support long-term growth. Our investments in cloud technologies, artificial intelligence, cybersecurity, enterprise applications, and managed IT services continue to strengthen our positioning in a rapidly evolving technology landscape. Coming to our quarterly performance, Q4 FY26 was very important quarter for the company. If I can take you to what we have envisaged or strategized when we started last financial year. Because of geopolitical situation, we, as a management, we decided to focus mainly on revenue, existence, and India market so that our revenue growth, our existence, and our technology focus remain intact. And that's been the case for entire year. On a consolidated basis, a total income increased by 8.1% year-on-year to rupees 56 crore. EBITDA grew by 68.5% to 5.04 crore, while EBITDA margin improved by 322 basis points to 8.99% compared to 5.77% in the corresponding quarter last year. The improvement in profitability reflects our net profit stood at around 8.96 crore as against rupees 1.13 crore in quarter FY25. The improvement in profitability reflects our continued focus on operational efficiency, disciplined execution, and improving business quality. During the quarter, we continued to strengthen our technology capabilities while maintaining healthy momentum across all the services portfolio, which is our cloud AI, blockchain, cybersecurity, and data and data center. FY26 was a significant year for entire Dev IT. On a consolidated basis, we reported total income of around 193.50 crore, reflecting steady growth in a dynamic market environment. If you recall, we projected around 190 to 200 crore revenue for FY26. EBITDA stood to 7.23 crore with a EBITDA margin of 3.74 crore. Here we have seen not projected value which we envisaged because of various reasons which I'll discuss later on. During the year, company reported a net profit of rupees 75.60 crore and diluted earning per share of rupees 13.25, which includes an exceptional unutilized gain arising from the reclassification of our Dev Accelerator investment following its IPO. Beyond the reported numbers, FY26 was a year of significance, year of strengthening our strategic position, expanding technology capabilities, expanding our physical presence, deepening client relationships, and building a stronger foundation for future growth. Several important milestones which we achieved during the year reinforce our long-term growth strategy. As you all know that last year during the call, we have also projected that we want our physical presence in North America. We want to have more and more business on our focus technological area called ABCD: AI, blockchain, cloud, cybersecurity, data, and data center. To strengthen and to continue that goal which we set last year so that we can build stronger presence and stronger business for Dev IT in coming years. We have strategically aligned with XDuce Infotech, which is USA-based IT service company, and they acquired 25% stake of the company through market value from promoters. This partnership is expected to strengthen our capabilities in high growth areas such as AI, cybersecurity, international market expansion. As you all know that XDuce in USA and in UK, they have strong on-site presence. They do have a similar kind of services which Dev IT has. So it's a very natural alignment which we have seen as compared to other opportunities which we got last year in after October. And then we decided that XDuce is the right match for Dev IT because we want our presence in North America market. We want physical delivery capability for our customers so that we can achieve more customers, we can achieve more market, and we can also achieve more profitability for the company. Best part for this entire alignment is as our focus is also on cybersecurity, Xfuse does have acquired a company called Phison Tech, which is a SOC 2 compliant company in USA, having their physical presence in Tampa, and they have their own intellectual property IP product called Verify, which is very important for cybersecurity area as well as BFSI segment. This will increase our cybersecurity portfolio down the line. We also have signed an exclusive master distribution agreement with A21 Technologies to scale our AI-powered intelligence platform across India. This will create new opportunities in rapidly growing AI and product ecosystem in India as well as MENA region. As you all know that Tally has its own presence, and Telligence is one of the unique AI-powered SaaS-based product, which is very useful for any client who is using Tally. And Tally has more than 2 million clients across India and more than 1 million clients outside India. And A21 is one of the biggest strong partner network of Tally, which is a consortium of Tally's biggest 21 partners across India. And having this distribution will give more, you can say, vehicle and more acceleration to Telligence to acquire more and more customers. Another notable achievement which we secure is also a very unique one, that all Microsoft 6 solution designation partner certification which we achieved last year, that will give us more strengthening and more presence in Microsoft ecosystem, not only in India, but also in North America, UK, and Australia. This accomplishment validates our technical expertise and strengthens our positioning with the Microsoft ecosystem, as I told earlier, enabling us to participate in larger and more complex enterprise transformation opportunities. During the year, we also took important strategic initiatives to sharpen our business focus. The board approved the transfer of Telligence and ByteSigner product businesses to Byte Technologies Private Limited for cash consideration of approximately 11.90 crore. We believe this step will support better value creation and allow greater focus on scaling our core technological service business. Additionally, we continued investing in our people through employee stock ownership ESOP initiatives, reinforcing our commitment to attract, retain, and reward high-quality talent. The broader technology services industry continues to benefit from strong structural tailwinds. Enterprises across sectors are increasing their investment in cloud adoption, digital transformation, cybersecurity, AI, automation, and data modernization. Organizations are seeing trusted technology partners who can help them improve efficiency, enhance customer experiences, and build resilient digital infrastructure. You must have seen that we have acquired many notable and big clients, not only outside India, but also in India, that too in government as well as in corporate sector. At the same time, India's rapidly expanding digital economy and increasing technology penetration will continue to create significant long-term opportunities for the industry. If you have seen our growth in acquiring more and more India market, so what we have seen that, and we have strategized that we will keep our focus on India market as well. We don't want to dilute everything to our export business so that any geopolitical situation can disrupt our company existence. So, though our India market is not so attractive as compared to export market as far as profitability is concerned, but it gives us lots of learning, lots of strength, and lots of visibility in the entire ecosystem. As you all know that India domestic market is also growing faster than our export business. This will give us more weightage down the line when more and more companies in corporate world as well as in government will adopt digital transformation. This will definitely give us a long-term opportunities and long-term value for entire company. Looking ahead, our priorities remain very clear. We will be focusing on ABCD, which is AI, BI, blockchain, cybersecurity and cloud, data and data center. We will continue strengthening our services capabilities, expanding customer relationships, increasing our presence across high growth technology segments like North America, UK, and Australia, New Zealand region, and investing in more emerging technologies that align with evolving customer requirements. Our diversified portfolio, strong execution capabilities, strategic partnerships, and customer-centric approach position us well to capture on future opportunities. While market conditions continue to evolve, we remain confident in the long-term outlook for our business. We believe the foundations we have built over the years, combined with the strategic initiatives undertaken during FY26, will support sustainable growth, long-term value creation for all our stakeholders. Before I conclude, then I'll take you to a few statistics. I would like to sincerely thank all our employees for their dedication and hard work, our customers for their continued support, our partners for their collaborations, and above all, our shareholders for their unwavering support and confidence in Dave IT. Before I take any questions, I would like to just give you a few statistics so that you have an idea that what are our goals and objectives moving forward. As I mentioned last year, that due to geopolitical turmoil, we will focus more on revenue and more on India market so that we can sustain if at all any eventuality happens. Thank God there was no eventuality, but we could able to achieve more contracts from India market. That have definitely decreased our profitability, but that one was not our concern at the time of last year when there was a geopolitical turmoil. But still, we could able to achieve what we had thought of. As you all know, that India market was our focus, but we could also able to achieve our export business mainly on ABCD. As you all know, that last year we focused on having our North America physical presence, and that is how XQ's alignment and association had helped us a lot. Now that kind of integration is going on between Excuse India office and Dev IT, so that Dev IT become Excuse worldwide global delivery center. As you all know, that GCC market is growing rapidly in India, and that is how Dev IT have participated in a joint venture called ScaleX, which is a joint venture of 4 companies, which will provide GCC as a service, and especially in gift area, which is Gandhinagar in Gujarat. We have also focused strongly and invested heavily, because we know that ERP and Microsoft Enterprise business is growing fast, and that also giving more profitability as well as more stickiness with the client. And that is how we have acquired DA Consulting a couple of years ago. Last year, it was a consolidation period for DA as well. And along with Dev IT, we also have focused more that DA should give focus on more export business rather than domestic market. So they have also acquired good number of USA and Canada-based clients. It was also very exciting for all of us that UCI have signed recently. This is not in FY26, but this is just last month we signed a shareholding agreement with UCI New York that they will be acquiring 25% stake in UCI, and they will also provide an opportunity of more than $3 million worth of business in US market for Microsoft Dynamics, which is focus business for them. We also have invested heavily in skill development. As I mentioned last year, last year, we have started investing into skill development that has been continued. We envisaged that skill development will be over by June or July 25, but it has continued and it is still on, so that we have capable people where our focus is. We have also strengthened our products like intelligence and BuySender. Though blockchain business could not pick up last year because of overall market condition, but we are still optimistic about blockchain business for exports as well as for India government business. As you all know that last year we have planned for a couple of collaboration, and then we decided to go with Excuse. That has also taken a lot of our time and efforts, because right now all the strategic integration is going on between 2 companies. As we all know that UCI have invested 25%, that also got delayed by 4 to 5 months. Still, there are many opportunities which we are expecting from various partners and collaborations, not only in North America, but also in UK and Australia. But currently our focus is North America, and that too integration of Excuse and then integration with UCI and GA. Our export business last year in FY26 we did around 45 crore, though before that it was 35 crore. We were not expecting, but we could able to achieve 45 crore. Cloud revenue business got 25 crore. Cybersecurity is around 5 to 8 crore of business. India government corporate business, we clocked around 110 crore, which was our focus. Currently, we have order book of around 50 to 60 crore worth of rupees. We have around 1,000 to 1,100 people right now, and we are expecting more people to join in current year as well. These are all things which we have envisaged, we have planned for next few years. And thank you very much for all our stakeholders for supporting our vision and for standing behind all the time. With that, I would like to open the floor for questions. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Samit Thakur with SKP Securities. Please go ahead.
Hi, sir.
Hi, Samitji.
Yeah. So I have a question on the acquisition. So XDuce, which has acquired around 24% stake in Dev IT. So what are the strategic benefits that have started following this partnership?
Okay. So, as I mentioned during my call, that Dev IT was totally an offshore business, and we want to have our on-site presence so that we can have on-site and off-site hybrid business strength, as well as we can acquire more enterprise level customers from North America and UK region. XDuce being a 20 plus years presence company in USA and in UK, they are extremely focused on enterprise-led customer acquisition. Their on-site presence also helps our company for this particular plans. So that is definitely give us a more, you can say, strategic business or focus when we want to acquire enterprise-led customers. We can then expand horizontally and provide more and more other services which we are very strong at. And XDuce being a North America company, they were also looking for global offshore development company which has a very strong policies, which has very strong processes and management support. So these two have definitely helped this particular alliance, and that will strengthen down the line our focus to increase our revenue and profitability and acquire more enterprise-led customers.
Okay. So both of the companies, they are targeting for the larger clients, global clients, right?
Yes. So both the companies, XDuce is extremely strong in enterprise, BFSI, healthcare, and government education sector in US.
Mm-hmm.
And Dev IT, we are extremely strong in offshore delivery, Microsoft technologies, processes, and mid-level customer delivery. So this will give us a strengthening. This will strengthen both the companies' delivery as well as you can say front end or positioning to newer customers as well as existing customers.
Oh. So, like, what are the revenue opportunities that you expect from this partnership for next 2 years?
So, as far as next 2 to 3 years are concerned, currently in this year, as this integration and various processes set is going on. So this year we are expecting around $1 to $2 million business from XUs, and from next year, from FY27, we are expecting around $3 to $5 million business, and that will grow 15 to 20% year-on-year.
Okay. So I just want to have an idea. Suppose you have a client and like maybe in the healthcare industry. So the client wants the enterprise and both the Microsoft technologies. So which are the expertise of both XDuce and Dev IT. So like how will the contract stand? So the revenue that is being generated, what will be the split and how the deal will go? So I just want to have an idea on that.
So as far as this split is concerned, all non-India thing will concern, it will be focused, it will be front-ended by XDuce, and their entire offshore development will be done by Dev IT.
Mm-hmm.
So split will be, you can say, 20-80. So 80% comes to Dev IT and 20% comes remains with XDuce.
Okay, understood. Okay, sir. Thank you for answering my questions. That's it. I will be joining in the.
Thank you. The next question comes from the line of Rupen Mehta, an individual investor. Please go ahead.
Hello.
Yes, Rupen.
Hello. Am I audible?
Yes, sir.
Yes. Thank you, sir. So my question is that, our company has been in the business nearly 3 decades. So what has changed in last 2 years that makes us believe that the company can enter into different growth trajectory?
As we are there in last 3 decades, and predominantly our focus in India market and SMB market. So that has really helped us to grow to a particular level. But to increase our profitability, to increase more revenue, and to increase more technological focus, we have to have enterprise-led and that to overseas clients. And without having on-site presence, it was very difficult for us to grow from A level to B level. And that is how this entire integration going to help us to grow both the companies. And coming back to your question about what are the change we saw.
Yes.
The changes we saw are that if we don't bring some kind of unique proposition in our services, then our billing rate is not going to be approved by clients. So there has to be some kind of unique proposition that to AI or some kind of blockchain-based solution. And that is how we have acquired Minddepth 3 years ago. And that is how we have acquired DI Consulting 1.5 years ago. And that is how we are focusing more and more on AI and cybersecurity, so that our existence and we can change and we can remain relevant to current technology and current change which we see in the entire world.
Okay. And as company has achieved all 6 Microsoft Solution Partner designation, right?
Yes.
So how many competitors in our size category have this distinction, and how does it improve our win rate in last deals?
Yes, sir. So, if I can give you example with one example that, so I don't know about how many companies are there who has achieved Microsoft all the 6 competencies. When I saw on asked ChatGPT in North America, it was around 5% of total Microsoft partner ecosystem. They have achieved around all these 6 competencies. So that's a uniqueness. Another thing, when enterprise-led customers, they are approaching any partner to provide services, they always see that how many certifications we have, and that too, not only with Microsoft competency, but also various certificates which we achieved. We are also very proud of having CMI level 5 which is extremely relevant in outside India market, also very relevant in India government market. So these are various points, and if I can give you a latest example where one of the customer, which is a leading sugar process company in Texas in USA, they approached us because of these competencies. And they approached us through Microsoft platform because we have achieved this competency. It's not only Microsoft Dynamics competency, but also various security competencies as well. And we could able to close that deal in spite of having our physical presence in India. At that time, excuse integration was not happened. So we could able to close that $600 to $700,000 business, which is significant for GA and JYP before prior to excuse integration. So this is the example which I can proudly quote what are the benefits we get from these 6 competencies.
Okay. And what percentage of our projects are now outcome-based or managed service contract versus traditional manpower-based management?
Traditional manpower base is extremely low. I can say it's in some digit. But as far as managed IT is concerned, we are around 27% of our total revenue.
Okay. My last question is, can you share the average deal size trends over the last 3 years? Any clients, are clients giving us the larger mandates than before?
So those are all, right now, I don't have that data upfront, so I just have to grab that data and give it to you. But it's around $80,000 to $100,000 deal size. And that too for at least 2 years of contract.
Okay, fine. That's it from my side for now. If I have any other question, I will get back to that.
Sure. Thanks.
Yeah.
Thank you. The next question comes from the line of Vinod Shah with VS Ventures. Please go ahead.
Hello.
Yes, Vinod.
Hello. Am I audible?
Yes.
Yeah, good afternoon, sir.
Good afternoon.
So I just have a couple of questions. So our revenue growth in FY26 was just around 5%. So what is holding our growth back in terms of revenue?
Okay. So as far as revenue growth is concerned, we have from last year starting, we have made it very clear that we will focus for revenue growth from India market, and if at all geopolitical situation is good, then we will achieve more from export business. We can able to achieve more revenue as far as India market is concerned, because we are empaneled with the Government of India's NICSI, Gujarat government, Rajasthan government, and then Chandigarh government. But we are always very you can say, focus that those orders which we are closing, those has to be very strategic in nature. Second thing, they should be giving certain profitability. And third, our cash flow should not be affected closing those deals. So this were main focus. And third one is we wanted to have more and more USA and UK presence so that down the line from current year to next 2 years, we can achieve more revenue and profitability. So last year it was a very strategic nature where we took a hold, we took a pause that we wanted to achieve certain things so that we can then prepare ourselves for more growth in next 2 to 3 years.
Okay. And sir, which business vertical contributed the most of revenue in FY26?
Sorry, come again.
Which vertical contributed revenue in FY26?
So in FY26, our India market gave 67% of revenue as it's a very significant. And in the geography and when it comes to technology, our cloud and blockchain business unit gave more revenue from this 67%.
Okay. And how much of revenue came from the repeat customers?
It was around 27 to 30%.
And how many new customers we added?
So as far as Dev IT is concerned, we are SMB based. So there are many new customers. So currently we are having around 600 to 700 live customers going on. So right now I don't have any exact number for how many new customers we have added, but our focus was to add more and more enterprise and few government customers. So we achieved around 35 to 40 that strategic customers in last year.
Okay. And what is the current order book?
Current order book, as I mentioned in my speech, it is around 50 to 60 crore.
Hello, sorry, can you repeat?
50 to 60 crore.
Okay. Sir, what is the revenue growth target for FY27 and the next financial year, FY28?
So as far as current year and next year are concerned, current year this integration and strengthening of both the team and this UCI and DA integration is going on. So we are expecting around 200 crore worth of revenue for current year, and next year we are expecting around 15 to 20% growth from current year.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question comes from the line of Parag Dave with Dave Ventures. Please go ahead.
Hi, good afternoon. So I have some couple of questions. EBITDA margins declined significantly at the full year level despite revenue growth. Can you tell what are the key reasons, sir?
Yes. So as I mentioned in my speech that EBITDA margin and profitability being decreased as compared to last year. So last year there were two things that exceptional income was there of around 13 crore, which is not there this year. It was around 4 crore. That is one. Second thing is we have focused mainly on India market where margins were low. And last year when this geopolitical situation was not so good, so we consciously decided that we will focus more on India market, even though our margins are low. so that we don't have any existential issues. That is another reason. Third one is after October or November, the strategic alliance and the partnership has taken lots of time as well as strategic bandwidth, because we wanted to first have our backend strong ready so that our processes are aligned with all the companies. And fourth one is we are investing more on people for our focus area called ABCD. We forecasted that all those things will be ready by last June, but it got extended till December, January. So because for that, we have to outsource lots of things to a third party to deliver our costs at having at lower margin.
Okay. Can you also tell me what specific actions are being taken to improve operating margins over the next 12 months or 18 months?
So as I mentioned earlier, that we have strengthened our process. One, we have strategically aligned with XQs and UCI so that our pipeline become very stronger for our future business. And third thing, that we become XQ's global delivery center, so that we do not have to spend our sales time going abroad and clocking more clients. So this is how these are the various actions which we have taken so that we can build more and more profitability and more revenue towards ABCD.
Got it. And how much pricing power do you have with customers in the current environment?
So you mean to say that our order book?
Yeah.
So our order book currently is around 50 crore to 60 crore.
Okay. Sir, I also want to know that pricing power, like how much the pricing power do you have with a customer in the current environment?
Okay. So that's a very interesting question. As we are very lean and thin in terms of delivery, because we are always very conscious in our investing in various things, because as it's universal truth that our profitability is low. So we set our processes extremely strong, and that we could able to find in the last 9 months, having a discussion with a couple of companies for the strategic alliance, that our processes are extremely great, and that also keep our delivery costs lower than other companies. That is one. Second one is this strategic alliance, where we become a very relevant with the company who is extremely strong in that area. So if I talk about XQs is extremely strong in enterprise, BFSI, and healthcare and education, public sector region, geography in US. And similarly, UCI is extremely strong in New York government business. They are preferred and favorable minority woman-owned organization in New York State, county, and city. And that gives us more visibility and more power to close more and more deals without spending our sales and marketing, you can say, muscles.
Okay. Got it, sir. So yes, that's all from my side, sir.
Thank
Thank
you.
you so much for giving the limelight on the business. So yes, that's all from my side. Thank you.
Thank you.
The next question comes from the line of Sanika Deshmukh with Phoenix Capital. Please go ahead.
Hello.
Yes, ma'am.
What was the
Yes,
thought
ma'am.
process behind transferring Byte Signal and Intelligence to Byte Technologies instead of continuing to scale them within Dev IT?
Yes. So, as you have seen that, it's always been a Dev IT product, as far as Byte Signer and Intelligence is concerned. What we have seen, a few things. One is that there are many strategic partners who just want to align themselves with the products, not with the company. So, like what we have signed strategic distribution agreement with A21. So that entire thing arise from during that time, that we want to have a strategic partnership with the product, not with the company. And another thing that the product business requires lots of investment, not only into developing the product, but also marketing the product. And that is also creating lots of cash. It is also attracting lots of cash from the system, and that is also creating the you can say lower EBITDA for Dev IT. So these are various regions where we thought that let's move it to a company, so that Dev IT, which is a focused service business, remain service business, and by technologies will remain a product.
So from shareholders' perspective, how should we look at the long-term value creation from this restructuring?
Are you talking about Byte Technologies for the long-term thing, for the Byte Technologies kind of thing?
Yes.
Yeah. So as far as shareholder are concerned, where I'm also one of the shareholders, where one is Dev IT EBITDA will grow more. Second thing, if at all there are talks going on with Intelligence, where few strategic investors or companies, they want to invest more into that company, that has created more doors for investors to invest into Intelligence rather than having that company, that product with Dev IT. Because when Dev IT was holding Intelligence, it was very difficult to attract more and more strategic partnership as well as investors. So as far as shareholder is concerned, this particular transition will definitely add more and more intellectual value as well as valuation, like what we saw with the DevX, similar kind of thing which we are creating with Intelligence in Byte Technologies.
So having achieved all 6 Microsoft Solutions Partner designations, what new opportunities does this create for the company in terms of clients, projects, or growth?
As far as all these SPD Microsoft Solution Partner designation is concerned, that's we have not quantified it in value, but that has created more value proposition and visibility in front of our enterprise-led customers as well as more and more geography. So, as I mentioned earlier, that one of the enterprise-led customers which we closed in Texas, USA, because of this SPD visibility. Same thing, we are expecting more. I can't, because of India, I can't give few names, but In Canada and in UK right now, we are in final talks to close high value business because of these SPDs. That is one. Second thing is our positioning in entire Microsoft solution partner ecosystem, where Microsoft also provide some benefit to these partners who hold these SPDs, more SPDs. So internal use license, then more and more lead visibility, not only in the North America region, but also in various regions. So we see a really good opportunity, and we have seen it that we could able to close enterprise-grade customers because of this SPD which we have achieved.
Okay, so that's all from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Harsh for closing comments.
Thank you everyone for joining the conference call of Dave Information Technology Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you, Harsh. Thank you all.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.